Hey everyone, in this video I'm going to make another request from a subscriber asking to compare the EV charging stocks EVgo versus Chargepoint versus BLNK charging to answer which one of these stocks is the best one to buy. So that's what I'll do in this video. Let's get right into it, starting with revenue comparison. And looking at this chart, you could see Chargepoint is leading the way in terms of overall revenue. However, in its most recent quarter, the revenue quarter over quarter came down slightly, while EVgo accelerated. So even though ChargePoint has the greater total revenue, EVgo looks like is taking lead in terms of revenue growth, while BLNK charging is more steady and growing still, but not as quickly as the other two. So if I was to give a leader in terms of revenue growth, I would say EVgo is the one to go with. The next metric I wanted to compare these companies on is operating profitability. I understand these companies are going to be generating losses because they're in growth mode. They're still investing in growth. But what I want to see is progress towards profitability. Progress is what I'm looking for here. And accordingly, ChargePoint is the closest to profitability with a negative 64% operating profit margin, but EVgo is making the most gains in terms of progress towards profitability and the pace in which it's making progress. Negative 139.7%, the lowest among the three, but accelerating quickly as it's gaining revenue. And again, BLNK charging, consistent, steady growth is leading to consistent, steady progress towards profitability. You could see BLNK charging just continuously, consistently making progress on that front. The next metric I wanted to compare these three on is cash flow from operations to sales, because they're going to have some expenses that are not cash expenses, things like depreciation, things like stock-based compensation. So I want to look at the companies excluding those expenses, and looking at that metric, EVgo again impresses with its progress, and in terms of overall, it's the closest to being positive cash flow from operations to sales at negative 37.79%. ChargePoint is relatively flat in this metric and negative 58%. BLNK charging, again, consistent, steady progress, although it is in last place at negative 123.4%. Finally, I wanted to compare these three on valuation, and measuring by this metric, ChargePoint is the most expensive at a forward price to sales of 2.66. Then it's BLNK charging at a forward price to sales of 2.26, and the cheapest among these three is EVgo at a forward price to sales of 1.75. Although all three of these EV charging stocks are down significantly off their peak valuations. So if I was to pick one of these three stocks to buy, I would go with EVgo. It's selling at the cheapest valuation, and it's making the most rapid progress in revenue, cash flow, and operating profitability in this high risk, high reward industry of EV charging. Remember, we're just in the very beginning stages of this industry. There needs to be more EV charging stations to accommodate for the growth in electric vehicles. We are nowhere near saturating how many EV charging stations we're going to need. So it's still very, very early stages. If I was to pick one right now, it would be EVgo. But that's all I've got for this video. Thank you so much for watching, and thank you so much for requesting this video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.